Hello and welcome to Budget and You. This is an interesting phase right now. We're looking at real estate in the run-up to the presentation of Union Budget 2012-13. Now, when you talk about real estate, you talk about equities. These are the main two places where you're putting in your money. But right now, everyone seems to be in wait-and-watch mode. But what's the way ahead? That's what we're here to discuss with a fine panel with us. Pranay Vakil joins us from our London studio, the Bloomberg studio in London. Also, here we have Harsh Roongta joining us, CEO from apnapaisa.com. Param Desai is also here. He's here from Nirmal Bang Equities, a senior research analyst over there. Good to have you with us. And of course, our developer joins us from Shobha Developers. We have the managing director, Mr. J.C. Sharma, joining us here on this panel discussion. But first, let me try and understand it from Pranay. Pranay, to bring you in first, this is an interesting scenario, like I started out saying, because, you know, as far as prices are concerned, it seems like the developers are holding out. In case debt is mounting, it's not a concern for them. At least that's how it seems. As far as consumers are concerned, people looking at putting in money right now, they're in wait-and-watch mode because they're seeing prices so high, inflation is rising, all of that, interest rates so high, they're not buying right now. As far as banks are concerned, well, they're not lending to real estate developers right now, as far as we know. But I want to understand, who's winning in this kind of scenario, Pranay?
Well, like you stated, there is huge amount of confusion. And there is a confusion with the developer, there's a confusion with the buyer, there's a confusion with the lender. All of them are a little bit confused as to why we are in a situation of a stalemate. But let's analyze this. The developer is under pressure if he is paid for the land on which he is developing. Now, when he is in a joint venture with a landowner, where he is not paid for the land, the pressure on him would be much, much less. Now, what happens is that in most cases, land would account for between 50 to 70% of your selling price.
Right.
Now, when you haven't paid for that 50-70%, obviously your ability to hold on to that stock would be much, much better. And that is what is happening, where more than 50% that we are talking about are joint ventures with the landowners, and therefore the ability to hold on to the stock is almost infinite.
Right.
That's one thing. Having said this, let me tell you that 31st March is going to be very, very crucial for the industry. Why? Because some of the repayments are falling due. Why? Because the interest will have to be met, and not all developers are equipped to kind of do that.
Right.
Now, they're hoping against hope that, like it happened in the last two budgets, you might get some concession from the government,
Right.
from the Reserve Bank, and therefore you might be able to kind of withhold this for a while longer.
Mr. Sharma here joining us from what Pranay is talking about right now in terms of what you're expecting from the budget and in terms of the cost of land, which is enormously high, and we understand that. But do tell us, from your perspective, why are developers so hell-bent on holding on to the prices that they have set aside, otherwise they're not going to sell?
Basically the land prices, which are being owned not by the developers, but in our view by the land bankers or the landowners, right? They are holding it because they feel it as a physical asset, one of the safest investment, where all the inflationary increases they can pass on, and still there will be buyers. From the budget perspective, we feel that after 4 years of slowdown from 2008 onwards, now we are clearly seeing market reviving. We also see that demand is coming back. And we do believe that the government can do a lot via this budget by rationalizing its tax structure and ensuring that it gives the required impetus, which with RBI likely to reduce the interest rate, will go a long, long way in not only reviving this industry, but overall ensuring that the government collects a higher quantum of taxes from this industry in the coming financial year.
Harsh, from your understanding right now, what is top of mind where consumers are concerned? Because obviously, like I started out saying, interest rates are something that are, you know, that is scary in this kind of scenario, and they're seeing interest rates rise to such an extent. But now there is this talk of interest rates climbing down as well. So what is going to change the scenario where consumers are concerned, because they have to build their real estate, element within their portfolios?
So first, I think one must distinguish between consumers and investors.
Right.
Consumer is a guy who's looking at it for his primary residence. He's a consumer.
Sure.
An investor is a person who's looking to invest, and he has choices. He's looking to see whether he wants to invest in real estate, maybe gold, maybe equity. So his calculations are completely different. As far as a regular consumer is concerned, clearly I think price is a major determinant. Price of the property is a major determinant. The home loan interest rates acts as a brake, because if the home loan interest rates are high, his eligibility for the loan is lower.
Right.
And given the fact that RBI clearly has been doing things to make sure that you put in more and more money. I mean, we have recently had the regulation regarding stamp duty registration charges not being
to be included. So then that really changes the game, doesn't it?
What they want is for the consumer to have higher skin in the game, and there's not necessarily wrong. I mean, as a real estate person, I may not like it. As a consumer, I may not like it, right? But
then who's it good for?
Well, it's good for the overall safety of the system. I think because the key issue there is that when you are funding an under construction property, really, even though a consumer may be there in between, the bank is actually funding the developer.
Right.
Apart from any direct funding that they might have given to the developer.
You're saying they're not funding the consumer, they're actually funding the developer.
Effectively. On paper, they have funded the consumer.
But they're making the real estate sector as a whole work, right, Param? You agree with that? Because, I mean, where the bank is coming from, and I'm effectively talking about what they're now saying that, registration, stamp duty, etc., not to be included in that loan amount that goes out. So, what's your sense of that? How is the real estate sector, and like he's pointing out, it's actually helping the developers more than the consumers. You okay with that?
See, to some extent, I do agree. Definitely with your loan ratio has come down from 90 to 80%. That has been deterrent. Plus, under construction properties, now you have to pay service tax and VAT, which was not there, say, 1 year, 2 year back. So this is adding more to the cost for an end user. Plus, if the stamp duty registration is not to be paid by the banker for the bank, then it adds more to the basically to the individual buyer, and that adds 10 to 15% easily from what the base selling price is there. And this basically is deterrent for the buyer to go out and buy the property as of now. It becomes more difficult from a buyer perspective.
Right, but how's the demand-supply situation right now panning across? If I can get you in, Pranay. As far as the Indian real estate market is concerned, there are certain pockets, and geographically I'm sure there are differences as well. But looking at some data that have been poring over, the National Housing Bank's Residex data, there's Kochi, Hyderabad and Kolkata. They've seen some amount of drop in prices last year. But if you look at Mumbai, Delhi, Chennai, Pune, all these markets continue to rise. In Delhi, prices have gone up by a whopping 35%. At least that's what the data is pointing towards. How is the demand-supply situation looking right now?
Well, I mean, it's very, very basic. If you try and limit the supply that's hitting the market, the demand is continuing, both for office space and for residences. I mean, there is going to be an imbalance, and that imbalance would result into higher prices. Take Mumbai, for example. I mean, for 8 months, we had a situation where, because of some lack of clarity on the DC regulations, none of the plans were approved. Now, for 8 months, if you don't allow supply to come into the market, what do you think will happen to the prices?
Right.
Because the demand is continuing. So, I mean, each of these locations have different factors working under them, but all of them are not really addressing the supply issue.
Two very important points out there. Mr. Sharma, just to get in your perspective as well, as far as supply is concerned, Pranay is saying there's a problem over there. And as far as infrastructure is concerned, not enough being done on that front. What would be the key issues according to you?
See, the key issue, if you really look at, it's a rate sensitive industry, where last year there have been continuous increase in the interest rates. And secondly, it is highly taxed. Here the customer pays the stamp duty and registration charges, and he is also burdened with VAT and service taxes. On top of this, when a customer purchases the home, he is only eligible to the extent of 150,000 rupees as deduction for the interest what he is paying. What we have recommended through our associations and directly is this, that this kind of a rate which was fixed 10-12 years back, where the apartment used to cost say 1,000 rupees a square feet, Today there should not be a limit, which used to be the case earlier, or if at all they have to fix the limit, they can fix the limit up to 500,000 rupees per borrower for his first home, which should allow them to save something on income tax and revert this money, direct this money for the home buying kind of a thing. Similarly, today in an immovable property, a real estate developer has to collect stamp duty as well as VAT and service taxes. Since GST is going to come in a year or two, the government can take the initiative by ensuring that there is only one tax and the tax rates gets rationalized. We do believe that with the interest rate coming down and with these two things, if the government introduces, the real estate industry will show a quantum improvement in its performance. Supply side improvement also will be there. To answer your question, the prices also will be rationalized, and at the same time it will not have any negative impact. But we believe that it will rather add to the government's tax coffers.
As far as the government is concerned, what can they do next to be able to lead the way? That 1% interest rate subsidy that was introduced by the government last year, has there been any takers? Because of that, any kind of change that we have seen right now, Harsh?
So I think, first of all, even if that subsidy is actually used up, I don't think it has really been used up. And it would be interesting to see when these budget papers comes up. It hadn't been used up as the previous budget, whatever he had made. It would be interesting to see if it has been used up this year.
Sure.
Right? To the best of our knowledge, there are not too many takers. Anyway, it's too little to really make an impact. 1% subsidy for 1 year.
Right.
On loans of a certain size is just too small. I think really the attack on the demand side, if at all you want to create a demand pool on the consumer side, it's not going to be created by these kind of subsidy giveaways. They're just too problematic to get. What you might, tax incentives work. So I mean that limit of 1,50,000, if you want to increase that for primary residences.
By how much?
So, I mean, there have been so by how much it should be unlimited, but I mean, fiscal issues are also there. So, it should increase at least to recognize inflation.
And at least for primary home buyers at this point in time, you agree, Param, because that might give a spur to the real estate sector right now, as much of a slowdown that we've seen in the recent past. And some of these results are for us to take a look at, whether you look at DLF or a Parsvanath. All of those results in the last quarter have been pretty dismal. So looking at giving real estate sector a spurt, we need to, offer more tax incentives.
Definitely. Just to add, the interest rate subsidy of 1% has been giving only to the 10 lakh. Now, the 10 lakh is very small amount to basically where the prices have been sustained over the last 1 year.
Right.
So what I want is the interest subsidy of 1% should continue, and the increase of 10 lakh should go up to 20, 30 lakh, where any buyer can basically take that benefit.
Right.
First of all.
Right.
Second thing, definitely the principal repayment under 80C, which is at 1 lakh, that should increase from 1 lakh to 2 lakh for buyer, because as the prices have remained sustained, the home loan, generally 80% of the home loan which comes to 35, 40 lakhs. So 1 lakh is a very small amount per se. Another thing on the interest under section 24, it should also increase from 1 lakh 50 to around 2.5 lakh to actually benefit to the buyer basically.
All right. What is your say on this, Pranay, as far as infrastructure bonds were concerned? You were talking about infrastructure just a while ago. Now, is that going to direct more money towards creating the all-important infrastructure to give a spurt to the real estate sector?
I think you're very right. The tax-free element is kind of drawing a lot of money. You've seen the oversubscription, and more of this is really required, except that let's recognize that there's going to be a time limit. From the time you invest to the time the infrastructure really is made available, that could be 3 or 4 years. Now, it will solve a problem in the medium to long term, but we need to solve this problem here and now. And some of what we've been discussing on the interest rate and all that is very, very important. My view is that there should not be any cap on the interest that you're paying for your very first home.
Right.
Whether the first home is costing you 10 lakhs, 20 lakhs, 30 lakhs, 40 lakhs, or even up to 1 crore. As long as it's your first home and you're borrowing for that, there cannot be an interest cap on exemption.
Right.
Similarly for ATC.
Right.
As long as the repayment, and you have very little control over how much you're going to repay. In the last 1 year, The EMIs have gone up by 25%. Do you mean to say the borrower is able to control it? Obviously not. So I think these are the things that the government has to recognize. And I think the most important thing for this is clarity and consistency.
In terms of regulatory cues from the government to be able to get more consumers into the fold, especially the primary home buyers right now that everyone seems to be talking about, to be able to give them more tax incentives, what are you looking forward to from the government, Mr. Sharma?
We are looking for it to ensure that the prices remain stable. The government needs to ensure that they increase the income tax benefit at least up to 500,000 rupees to the extent the interest is being paid on the amount borrowed by a home buyer. We are also requesting that the government should reconsider levying two rates on service tax as well as on VAT account to the customers. It can be combined and say 6 to 8% rate can be levied on the customer. Besides that, we also have requested that in order to boost affordable homes in cities like Bangalore, Chennai, Pune, Hyderabad, right, government can have a scheme which was 80IB, which can be revived, where tax exemption is given to the developers if they construct affordable and smaller homes.
And we touched upon this as well, Harsh. Roughly a quarter of what is spent, the cost of acquisition of real estate right now, that goes towards duties, that goes towards taxes of all kinds. Can we expect that to go down? Will the government, bite the bullet, as it were, to be able to give us more SOPs?
So I think this whole thing about service tax and VAT, etc., is really ridiculous. I think it is effectively killing off the industry. Very clearly, the cost impact of that is so very high. Mm-hmm. What that is doing, and I don't think that is really the intention of the government. What that is actually doing is that it is pushing people to go for resale properties rather than go for under construction property. From a consumer perspective, that's not too bad, okay, because there is risk involved in under construction property. But the key issue is, how is supply going to come up if you're going to cripple it with so much cost?
That's right.
So I think clearly, unless these costs come down, you're not going to be able to see lower prices.
That's right. And supply is this major concern, Param, to be able to bring you in that discussion, because Pranay and Harsh, all of them are pointing towards that. Mr. Sharma as well. Now, if you're going to have the supply situation get addressed, and what you're seeing by way of real estate companies and what they've been doing so far, what's your sense?
So the most important thing I believe is, first real estate sector should get an industry status. That is the most important thing, because that will bring more transparency what an investor is looking at. And from a supply side, you see, if you require an approval, we get 1 to 1.5 years to take all the approvals. So there should be single window clearance, so that the approval process is very fastened up. It will bring more supply, and the prices will be much more realistic than what it is right now.
We are looking at the real estate space where our investments are concerned, where our first home buys are concerned. Let me address this to you, Pranay, because what I'm understanding is the Confederation of Real Estate Developers Association, they've sought an extension of tax holidays for housing projects under Section 801B, from what I can understand, that's of the IT Act. Now, enhancement of that benefit to individual home buyers, extending IT benefits to affordable housing projects. Do you think that is going to change the scenario in some way?
Well, that can really change the scenario if you remove all the ifs and buts. And let me explain to you how this works. This benefit was available for developing smaller apartments of 1,000 or 1,500 square feet, depending upon the city that you are in, and the entire profit was tax exempt. Now, if you had just one small shop line on the ground floor, the benefit was denied to the entire project. Right. Why? Because it was considered commercial and not residential. All right. Now, these are some of the irritants which need to be removed if you want the law to really operate. How many developers have been able to get benefit under that section? Very few, or almost none. If you want people to get that benefit, remove all the ifs and buts and be liberal with what you want to do. Be very clear about what you want to do, And yes, the developers will come forward and create that affordable housing, which is so very much needed in this country.
So the sense I'm getting from Pranay is this little bit of tinkering is not going to help. You'll have to be much more liberal. You might need to be a lot more large-hearted, and the government will need to kind of lead the way on that front. But as far as the market is concerned, the stock markets in the run-up to Union Budget 2012-13, what's the sense you're getting? What's the outlook for the real estate sector?
See, overall, definitely the stocks are outperformed the market, and it has caught us also in surprise. But what we believe is things have not changed on the ground what it was 1 month back. Even just taking the data what has been showing in December, the new launches and the sales has remained pretty much subdued so far. Even the third quarter results has remained pretty much subdued. So what we believe the challenges still persist in the near term. The debt is a major overhang on the counter. What the developers have committed 1 year back that they will be reducing debt by 10, 15, 20%. It has not happened yet. So what I believe the debt has to come down for the investor to look at the sector more positively. So far, it's not happening.
Right. So investors are wary. The people who are buying property are very wary from what you're understanding as well, Harsh. But have there been more takers? Because we understand there is an uptick, something that you are bringing to the table as well as far as home loans are concerned. What's spurring that kind of growth?
So, as I said, we're seeing increase in researching for home loans. I mean, that's the figure that Apna Paisa tracks. I mean, we typically get roughly about 25,000 people who give us all their details and tell us we're looking for these kind of home loans.
Sure.
We've tracked that, and I think on a seasonally adjusted basis, we see an increase. And that's surprised us. Remember, these are research. They may or may not end up buying.
Right.
So one of the conjunctures that we have is that it's possible that there could be a small uptick coming in from non-residents.
Right.
Especially because the
But do you
rupee
think they're
has
looking
fallen.
for home loans right now?
So something has to explain this uptick in...
Right, because nothing has fundamentally changed right now, and perhaps the change is going to come forth, and hopefully it will. If you had a wish list, Mr. Sharma, what would be on top of that if you had to tell the finance minister? Because obviously you need to approach it from the consumer's standpoint. It might be slightly difficult for you to do, but take a step back and tell us from the consumer's standpoint, if they have to lead the growth in the real estate sector, what would you put right on top of that wish list?
You are aware that overall there has been quantitative easings being practiced by most of the central bankers. The outside India, the interest cost is 1 to 2%. Here developer pays 14%, 15% of interest. Let them allow us to borrow money from the international market at competitive rates so that there is less strain on the Indian banking system. The dollar money will come. We will do effective hedging also and ensure that we make real estate industry not only vibrant for the developers but also to ensure that it adds to the GDP growth as well, because we provide lots of employment, we make most of the industries viable, and at the same time we meet the requirement of an average middle class who are migrating to the cities.
All right, that's about all that we could pack into this discussion here. Pranay Vakil joining us from our London studios, Param Desai here in Mumbai, so is Harsh Roongta, and Mr. Sharma joining us from Bangalore. It's a pleasure having you with us. We'll be watching this space very closely, what the Union Budget 2012-13 has in store for primary home buyers, also those investors out there. We'll be watching the cues very closely. Thanks for joining us.